Hi, this is Papa with Ndofire Tutoring. So today we'll be doing a bit of analysis and interpretations of financial statements. So firstly, we'll do the profitability ratios. Now, whenever they speak of ratios, you should think of 1 is to something, that type of thing. But it's not only limited to that. It can be also be described in percentages, as we will see. So we are going to calculate the profitability ratios of the documents that were given above, right? So for profitability ratios, just remember, you will have your return on equity. Now, what is your return on equity? Now, your return on equity is made up by... Okay, I think I've moved a bit. So your return on equity is made up by the following. So firstly, you should note there is a formula to this, right? So let's start off by putting down the formula. The formula for return on equity is profit, or let's say net profit over total equity. So profit, net profit over total equity, right? Net profit over total equity, or let's just put it as equity over equity. So looking at this, the times 100, because we have to put it down as a percentage. So your return on equity will be analyzed as a percentage, right, or interpreted as a percentage. So now we need the amounts. So this is the formula. So let's go down, let's go up and get the amounts. So for our net profit, let's start over there. So we have a net profit. So we're doing for 2014 and 2015, and as we go and check out our net profit there, we find that our net profit is 7,000, right? So the profit before tax that you see there, it's the net profit. That's before your interest income and other incomes, right? So let's go down again and start recording. So you have your 7,000 for the year 2015 and 12,500 for... Now we also need to check our total equity. So as we do go down, let's go record what we have firstly, which will be our 2014. Let's put it down in years. As we put it down in years, it's gonna be 2015 maybe here, and we have our 2014 here. So let's go ahead and calculate. So we have we had 7,000, right, as the net profit that side. We do not know this amount, and for this, so this is going to be multiplied by 100, and for this, let me just put a line that goes down. For this, it was 12,500 if my memory serves me well, over whatever amount that we are going to find in the balance sheet, right? So times 100%, and then it will give us certain values. So let's go to the balance sheet and check for the equity. Total equity according to the balance sheet is 147,000 for A and 119,000 for B. So let's go back to the solution and basically start putting down the correct amounts. So it's 147,000 and 119,000. So once you have put this down, you can start calculating. So for your calculation, you'll find that the return on equity for 2015 was 4.76 as I round off percent, right? And for 2014 it was 10.5% as I round off. So these are your profitability, or rather your return on equity ratios. So the return on equity is described as a percentage. So this is a percentage and this is a percentage. Now let's carry on and calculate the return on assets now. So for your return on assets, again, you should not be worried. It's simple formulas that are surely provided also in your exam book, right? So return on total assets. So here you'll have your net profit, plus, so if you have your net profit plus any interest expense, interest that you could have paid, so interest expense is added, so plus interest, right? Plus interest, not interest on capital, but interest expense, your finance costs, so over your total assets, right? So clearly it should be over total assets because it's return on assets. Total assets. So for your total assets, you know, we're talking about both your current and non-current assets. So times 100. So this is how it is. So right now we are going to carry on and calculate for 2014 and 2015. So before we calculate this, we are going to make a small calculation here at the bottom where we are going to add our net profit with our interest. So our net profit is 7,000, right? And our finance cost is yet to be seen, but we know for a fact our net profit is 12,500 in 2014. So we are gonna go back up to check for our finance costs. So finance costs, it's 15,000 and 10,000 respectively. So we are gonna go down and we are gonna add 15,000 and 10,000 respectively, right? So as we add them, we are proceeding to finish whatever is required of us for this section. So it's 15,000 if my memory serves me well, and 10,000. So those were your finance costs. So once you have this, you can then add the two together. So you have your 22,000 in 2015 and you have your 22,500 in 2014. So now you have the amounts that you need to be able to calculate what? Your return on assets. So basically you'll have your 22,000 right there. 22,000. That will be over total assets, which we do not know yet. We are going to go up and check for it. So it's 22,500. So over your, remember we haven't found the percentages yet. So we go up. As we go up, we're looking for our total assets. So total assets, 252,223,000, right? So let's go down again and insert those amounts right there. So remember, this also should be multiplied by what? By 100, so that you can get a percentage. Now, according to what we saw that side, it was 252,000, as well as your 223,000, right? 223,000 So all this should be multiplied by 100. Even this side is 100. So once you have multiplied both sides, you will get a percentage of, for this, you will get 8.73 if you round off to the nearest second decimal place. And for the other side, you get 10.09% if you round off to the nearest. Again, once you have done this, you have actually started gaining a lot of knowledge with your profitability ratios. However, there are others. So until our next lesson, please try to repeat this video over and over and check your ratios for the return on equity and the return on total assets, right? That's it.